Welcome to Share Talk. Today I have the pleasure of speaking with Andrew Bell, who is the chairman of Red Rock Resources. How are you today?
Very well, thank you.
Now, obviously we interviewed you a few weeks back and you said that there should be some news out, hopefully in the near future, in regards to the Jupiter mine. And today that news has come out. Would you like to update us on what that is, please?
Yes, it was an equal offer. It's called an equal access buyback. Is a technical expression in Australia, whereby a company can offer to buy back from all shareholders equally a certain number of shares. In this case, Jupiter offered to buy back 6% of everybody's shares, and 98.1%, just over 98% accepted. So in effect, we all have slightly fewer shares, but nobody gets diluted. So we have the same percentage of interest in the company as we did before. And since it's a very long life asset with between 60 and 100 years of production left, you could say that the value of the company hasn't diminished. So in that respect, it's like a dividend rather than a reduction in value of the company.
So in regards, obviously, to this, what was it that you saw within this that made you think, I will do this for my shareholders?
Well, it was actually, Cheapy was repaying its shareholders in the mine the majority of all what it would cost to develop the mine in this first dividend. And so that money came to Jupiter, or half of it did, and Jupiter decided to make a distribution, having plenty of cash. And so we all got the opportunity to do that, to tender 6% of our stock in exchange for money. And so we get £537,000 as, in effect, a dividend, with a clear intention, if conditions are right, to pay another one in 6 or 12 months.
And obviously that leads on to the next question. Now, you've said there that the first distribution repays most of the cost. Are you expecting further opportunities, or is it a case of you already know that there's going to be opportunities?
Well, I think that Jupiter is Cheapy is a mine that will continue to grow. It won't grow each year just simply because demand in the market goes up and down, and it is a market that you can swamp by overproducing. But over time, I would expect the Cheapy mine to claw its way into a position of predominance, because if you look at the major competitor, if you can call it that, which is South 32, break off from BHP, then South 32 has the Mamatwan mine next to us in South Africa, next to Cheapy, and it has Root Island in the north of Australia. Now, one of those has a life of 10 to 12 years, and the other has a life of, say, 5 to 7 years, we believe. And that compares with our life of, say, 100 years. So we are going to become, I would expect, the price leader. We believe, the cheapest or about the cheapest producer of bulk manganese, and over time that position can only improve. Also, with so much of the world's manganese in that area in South Africa, the Kalahari Manganese Basin, and knowing that it's only along the eastern and the southeastern side of that basin that the ore, which dips to the west, is shallow enough to open pit, future miners are going to have to mine from underground, which is going to make their production intrinsically more expensive. So the strategic position of Cheapy is really remarkable. And so we're very happy to continue to have an investment in that, because we think there's still inbuilt growth. We produced in the year to February, say, something between just 2.2, 2.4 million tons. And we have railway sidings and loading facilities designed for up to 5 million tons.
In regards to this cash payment that you've had then, what are the proceeds of that payment going to contribute towards? What are your plans with that money?
I think that we will adopt quite a conservative view. We will want to continue to improve our balance sheet, strengthen ourselves. We will, of course, look for opportunities, but in no hurry. We want to look for things of equal quality to the asset that we are beginning now to pay down our interest in or get a return from. I think that in particular, we would be very reluctant to issue shares, which we haven't done since last summer, to issue shares, to issue equity, because we'd be diluting the existing equity too much, because we know what the value of the Jupiter holding is, and it is several times the share price. And it's easy to say that, but that this one holding is worth several times the share price, because this dividend, in effect, or buyback, sets a benchmark. There was a study done, an independent study, to assess what level this buyback should be at, and this was more or less the level determined. And on our long-term view, which has been fairly consistent for years of what this asset is worth, I think it remains very cheap. So until we see the share price more nearly reflecting the value of the cheapy asset, it would not be sensible or prudent or wise for us to go and issue a whole lot of stock, which means that it's actually better for shareholders. We're doing a better deal for them in keeping our costs low, looking for the exceptional deal, and even if we could borrow cheaply against our remaining holding in Jupiter, that would be a sensible way to go. But issuing more shares wouldn't be. So I think that's the context in which we're thinking. What we want to see is that without anything being done by us particularly, the value of the shares goes up 2 or 3 times to where we think it should be. And at that stage, we can start looking to what we do next.
In regards to your other projects then, the last time we spoke, I believe we touched on the Kenya project. Is there any news based around any of the gold licenses being issued?
Well, I think there's a lot of other news that we have. For example, our iron ore assets inside Jupiter, on which it's royalty. They're not necessarily dead. I mean, there are opportunities opening up potentially there. There is, as you say, the gold asset in Kenya with already 1.2 million ounces, and Acacia to the north has already shown with a proper exploration program how you can get a worthwhile resource, similar to the ones in the south in Tanzania. So there we are, sitting there, obvious target, and proper exploration in our license would, we think, produce the same kind of results. Because there was some politics, and this ended up in litigation against the government, we haven't been able to do that yet. Perhaps just as well in the years when the gold price was lower. But we went in there in 2008, 2009, whatever it was. We spent a lot of money quickly in doing some very good work. Since then, there's been easing off in the gold price. We've been caught in this litigation. That's now been transferred from one court to another, but is nowhere near ending. And everyone has an interest, including us, in getting a settlement there, in order that the huge potential value of that license can be realized. So, of course, now we're going to be working on that, and that's another aspect to what we have. We also have the royalties and the promissory note that were left to us after we disposed of our Colombian gold asset, which is producing. And we have been trying to enforce our rights there. And I would hope that we and the other party will not waste money on arbitration, but will come to a settlement soon. So there's plenty for us to be doing to extract value from other parts of our portfolio. Yes.
In regards then to the fundamentals of all of the different aspects of your holdings, how do you envisage closing the gap between your market cap and what the fundamental attributes are to what is on your portfolio?
I think markets are always slow to react. They're slow to react on the downside and on the upside. When we went into a bear market for the sector, for commodities, for, in some respects, small AIM companies, from 2010 to about beginning of 2016, people got used to thinking in a certain way. They had to unlearn the lessons they had learned before, and it will take a while to get them thinking in a new positive way again. And of course, there are some old shareholders who remember the experience of losing money when they invested in our stock. So we have to show people both that it's a different market, that we are genuinely getting value out of these assets, and that we no longer have the need to issue a lot of shares in order to pay down debt, survive, cope with the problem of a diminishing capitalization, which had gone down faster than our payroll had gone down, or than our liabilities had gone down. So we're not under any illusions that comes quickly. But I think that because so much change has come to the value of the portfolio, that, for example, our Jupiter holding, we had in the books at 1.2, now 1.4 million, and here we are, just 6% of it. We've actually put a value on of nearly 600,000. And having paid that 600,000, I would say, well, the remaining holding isn't worth 94% of what it was before. It actually should have just still be worth 100% of what it was before, because we'll continue to get an income from it, and it's not a wasting asset. Unless you're thinking in terms of 100 years, which on anything other than zero inflation or negative, you wouldn't be.
So in regards, obviously, to assets then, if we can have a look at similarities to your other company, Regency Mining, which made quite a cheap acquisition, which looks to have a lot of upside potential, is there any plans for you to acquire other assets or take part in any sort of joint venture projects to get a near-term cash flow into Red Rock Resources?
You have to look at where you are. And in the case of Regency, we actually issued quite a few shares in order to buy into these assets, although we got in extraordinarily cheaply, and expect to have bought that cash flow very cheaply. As I've said, we would have a bias against issuing shares in the case of Red Rock, because the best place for us to make increased value is in our existing portfolio and achieving a better recognition of it. So I think we have the potential, if we want to explore too, of sorting things out in Kenya, exploring that, maybe exploring in the Ivory Coast, where we have some license applications. And we also have the shares in Shoals Creek development, which is oil production in Louisiana, which has had some management problems at our partners, but where we think there's a possibility we'll be able to sort that out. Now, if we can sort that out and expand that, there's another asset that could generate quite a lot of cash flow and be valuable. But we already have Jupiter now producing cash flow and dividends. So we've moved towards a situation where we are generating the income that covers our costs.
So in regards to future news flow then, what can we hope and expect to see from your company?
Well, you'll see, I think, a continuation and build-up in gold royalties, in some, we hope, oil payments and gas payments, in dividends from Jupiter, and you will see a news flow directed at making the company easier to understand, simpler, more institutional, and finding ways to develop it along the lines it is. But the pace at which we do that will be governed by the pace at which the recognition of our existing value comes about, because we can't get away from the fact that our best value is the Jupiter holding, and that should be something that we can put a value on, but we're trading at a big discount to it.
Andrew, subsequent to yesterday's news flow in relation to the Jupiter mine, I obviously look with interest on the item that you've released today, and that is the fact that Merrill Lynch has been appointed on behalf of Jupiter Mines to potentially sell the asset on. Could you tell us further about that, please?
Yeah, well, obviously, you don't go to Merrill Lynch unless you've got something substantial that you're dealing with, because they will have relatively high fees, and Merrill Lynch won't take on business unless they think that it is going to be a substantial fee earner and asset for them, and something that they can add value to, because they can interface with clients of the caliber of any likely buyer for this asset. So there we are. No secret now that Jupiter and we are looking to either see a relisting of Cheapy or Jupiter itself, indeed, or a sale of the Cheapy asset. And to coordinate that, to run the two processes in parallel, Merrill Lynch have been appointed, which shows the seriousness of the intent, and probably indicates that the time scale in which we're thinking is not going to be a very long one. So that process should unlock the differential between the value that people perceive in this unlisted asset in our balance sheet now and the public value, which is that value set by the dividend payment recently, where 6% was valued at nearly £600,000 of our holding. So, if that holding is worth, as a starting price, 8 or 9 or 10 million pounds, and there's an exercise to list it or sell it, then our market capitalization on that one asset begins to look a little bit cheap. And the only justification for it being cheap might be that people would say, well, we don't know about future dividends. They might happen, they might not. And it's a minority stake in a private company, kind of locked in. But when they see Merrill Lynch appointed, that's just one more indicator that things aren't going to be like that. Things are going to be different.
In relation, obviously, to the sale of the mine, we've obviously touched that the mine life is going to be well in excess of 50 years. Do you think the price that will be put on it will only mean majors could potentially buy the asset?
It'll be obviously a very high price tag, because Jupiter's holding in Cheapy, or you should say Jupiter's value, is set by this distribution that's just taken place at pretty near $1 billion. And I would think that in a sale or listing process, we'd be hoping for at least that kind of value on our portion on the Jupiter portion of the asset.
So in regards to the timescale that you might perceive, is there any indication as to when that could happen?
No, but when you start doing this kind of exercise, everybody's time costs money. We don't want to waste time. Merrill Lynch don't want to waste time. The objective is to get done as quickly as possible. So if one was talking about a sort of 5 to 8 or 4 to 12 month time frame, I have no doubt that most people would agree, yes, that's a reasonable kind of time frame. Probably that's the time frame within which something's going to happen.
Andrew, it's been a pleasure speaking to you. Thank you for your time as always.
Thank you.